What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And tonight, late night, I am so excited to finally break this wide open. This is one of my most exciting events to happen since getting started in VeVe, because I now have the answer to my long-awaited dream of having real candlestick charts for the VeVe items. Major, humongous crypto pro shout out to Omi the Clown.
Yay!
I'm gonna tell you what, a lot of hard work has been done on this website. It was great before, and now it is beyond outstanding. I'm just going to run through a few items. This is not even a serious report, but the purpose of this video is so I can show you that by studying these charts and understanding technical analysis, you will not be shooting in the dark and taking blind stabs, just guessing as to when to buy an item, because now you can make an educated guess based on where this item is on the chart and what the technical indicators are telling us. Oh man, I've been very, very busy lately. As soon as the superstars, Rob and Joe, had announced that this was going to happen, that this was coming to fruition, they're the ones that told me to go check out Twitter, that Omi the Clown had posted about this, and I about lost my head back then. And yesterday was the first day, because of this busy last week. I think this opened up on the 17th of September. But yesterday was the first day for me to jump in and look at the charts, and I could not contain myself. Now, I'm just going to scroll down here and pick something, and I'm going to show you what we are capable of doing with this incredibly powerful website now that we have these technical indicators. I'll just pick something random. Let's just look at Spider-Man Secret Rare. I'm going to open up this chart, and then I'm going to have to scrunch this over to fit it in. The dimensions don't quite fit with the dimensions of my video capture software, so I have to monkey around with this just a little bit to get it all in. And then we're going to shoot this over here. And this, my friends, is the chart for the Secret Rare. And I'm going to slide myself down here out of the way so we can see these indicators. Now, you'll notice that we have real candles now. And so you can click on candles and get your style of candle that you like. And on some charts, it looks more like the stair-step candle than the full body candle, because the data, it's really hard to collect the data to do this, because you've got to have buying and selling action all day, every day on very minute intervals and able to be able to do this. And so since he's got the access to the API data and to get those hourly floor prices, then we're able to get these charts. Now, here is the magic. Number one, we can see the peak of the last bull run right here. There's our peak, and you can clearly see the 4 phases of progression that cryptocurrencies and any stock or anything goes through. You have number 1, the accumulation phase. Number 2, consolidation, when you get that little bump up. Number 3 is the markup phase, when the price goes crazy. And number 4 is distribution. So after we had this blow off top, we can see that we took this nice dive down, and then you get these little bear market rallies, some people like to call it, where you have little bumps that come up, but then you resume the action of the price in decline. So we can see clearly here as we were topped above $100,000, and now we are still in the distribution period with these little bumps along the way. Here is the magic. With the technical indicators, even in a bear market, we'll be able to tell when we're getting close to a time where these bumps can happen. And that means you can make money on the way down if you are into flipping. Please accept my apology for the craziness going on with my shirt here. I forgot I can't wear this shirt because my green screen software doesn't like that color. All right, let's clear this out. And let's add on the indicators. So we are going to jump down here, and number one, we're going to look at the stochastic. And let's go ahead and save that. And then number two, we're going to include the MACD. There's so many different things. Even on balance volume is here. Bollinger Bands is here. We got it all. And then I can even change these indicators to view them in the way that I'm used to viewing. And so I usually like the stochastic to be orange and blue, for example. We can also get on the moving averages. So if I put moving average in here, I can get the periods that I'm used to. I like the 50. And on the 50, I like to make that in orange. And then I also like the 200. Let's put another one on here. Here we go, 200. And I like to see the 200 in blue. So we add these two. And what we can see here, you've got to have a lot of data in order for the 200 to show up on the chart. And so we're going to have to extend this 200 right here where it probably was coming along something like this. All right. And so what we have here, we can see where there was a death cross right there, which says, okay, you're confirming the bear market and you're on your way to an all-time low. And that all-time low looks like it was here, and then we're within that range of the all-time low again. And you got your outliers, or some dodo bird will sell something for $1 or a gem or 2 or 3. But just kind of ignore those outliers there, because you don't usually get a chance to buy a secret rare Spider-Man for $1. Okay, so when we look downstairs at these other indicators, and I usually smooth these out and I change it out, whenever you're crawling down here in this area where you're languishing low, okay, what you're going to be able to do here is look at your stochastic and know when is a good time to expect that one of these bounces like this is going to happen. It's when you get these low points. Here's a low point here. And as I always teach in technical analysis, when the low point coincides with a low, or soon after you get a low right there, that's when you can probably expect a bounce the next time you get a full cycle up to the oversold zone where you cross the 80 line. This is the 80 line. You can't see it because it's in black. And then this is the 20 line. The 20 line is the oversold boundary. The 80 line is the overbought boundary. So then we bounce up. So when we were at this stochastic low, we could say, hey, we might be able to take a chance on picking this up to do a quick flip. Now, we stayed down here, bouncing around right here, and then we see another bounce up where we confirmed we got into the overbought zone. We never reached that during this long period of time here. We just stayed down low. So any purchase down in this period during this range, while we had the stochastic not really getting above 50, would coincide with this price line here. And so if you would have bought there, you would have been able to jump out right here at this peak. And another thing that you can use these indicators for is to know when price is going to correct. When this peak hit and it went up above the 200 moving average, you could expect the price is going to move down. All right, so in fact, that's what it did. Price moves down, stochastic goes down. Well, we stayed down here languishing low, which would be another chance to try to flip. And then when we went up here into the overbought zone, we can see another peak price. Now, that's not huge, but it's there. I will look to buy during the time period after we have had a lot of flat line and when the stochastic stays low. Now let's look at the MACD. You can't really see it on here, but this is the peak of the MACD. Here's a small peak from that bounce. Here's another small peak. And after that red line crosses over the purple, that's when price goes back down. Now that we've flatlined for this extended period of time, we could probably expect there's going to be another small bounce at some point. So that's the way that I'm going to use those indicators. Now let's try a couple other items here. Let's just jump back and let me stretch this back out. And we're going to scroll through and see if we can find another favorite that I would love to see the candlestick action. Let's see if we can get one that has a better example of the candlesticks. Let's say glider animated. Let's look at it and see what it looks like, because this one is really bombing out right now at a price of what, around 90. I think it's at 90 gems, which is just incredible to see the price dip down that low. Okay, here we are. Let's close this section out. And here we have it. We've got some nice candles here. And you can also change your time periods. We can zoom in on this. Here's the 3 month, there's the 6 month, year to date, 1 year, and then the absolute maximum that shows what, when we came right out of the box, pumped up. And then here are our 4 stages, all-time peak up here at 950, and we're in this distribution phase. So let's turn on that stochastic again. Now, what I'll probably be doing, I will probably only report on one item at a time so you can learn how I'm doing this. I won't do several at once. So my common practice is going to be to do one at a time. All right, let's make this fast line blue and the slow line orange. There we go. So here's our stochastic down here, and you can see where the stochastic peaks. We get this all-time high. Distribution, we come down low, and you could have done a small flip here, but this one doesn't have great big bounces during the flip. But when we get to the low point here, this would be a better time to buy than when the stochastic is up at the top. Bad place to buy, good place to buy. And so each time, as you can see, just like on that previous example, when we jump into these peaks here, that's usually when we get a little bit of price action moving up here. So here's a nice peak here, there's a bounce. Here's a peak here, there's a bounce. Now notice how we're way up on the stochastic here and there's no action here. That's pretty cool, because that says that we are lying low like a dog, a lazy dog on the ground, and we're building up to another bounce. Okay, let's clear that out and look at one more item. And again, I'm just showing you what is possible. I want to see if I can get, I had one of these charts up here that just had a beautiful view. The candles were fat and you could really see what was going on, but I don't remember which one it was. I'm going to look for a Gale next. I'll see if I could. There it is. Here's Todd. Let's do Todd. Maybe this will be our last one, or maybe we could do one more. So we'll collapse this in. Oh man, I tell you what, this is just super exciting. I will never buy another item again without studying these charts first. This is going to be the first thing that I do. I'll look and see where the positioning is. Let's pull the stochastic in here. Let's make that fast line. Let's just make it blue for now. Here we go. And you can see it again, distribution period coming on down. We have the small bumps along the way. But look at this peak up here, nearly 15,000 on that last peak. And now you can see that if you're buying down here in this area, if you've always wanted a Todd, want to get one, the price is pretty flat, which tells me that you're not going to leave as much money on the table when you're buying during a flat line. All right. Now, when you have a lot of volatility, and I'll show you one example of an item that has a lot of volatility, and that is the Coca-Cola footprint. Maybe I'll end it on that one. Let's see if I can find the Coca-Cola footprint. Let's search and type in footprint. There it is right there. This is an item that you could really do a lot of flipping on. And I'll show you why. These are beautiful candles here, guys. All right. This is what you want to see in some candles. So let's just stretch this out to max and see, I guess, this one started out at 20 gems, I guess was the retail price. So let's pull up the MACD and let's just throw on the stochastic. There's our stochastic. Make this one blue for simplicity. And let's go ahead and put those moving averages in. Let's start out with our 50 and give it a color of, say, green. Which green? Let's do this light green. And let's put one more. Let's do a moving average of 200, because these moving averages, when they cross, they're talking to you. They're trying to tell you something. They're confirming a bear trend or confirming a bull trend. Now, we only see the 50 here because there's not enough data to get a 200. Now, you can also put a 12-day and a 21, or a 9-day and a 21, and you can get crosses on those lines to know what's happening. And we can see that in general, we have an uptrend going on with the footprint. But look at the price volatility. You got this low point where it was down here around 6 gems, okay? 6 gems here, and then it's run up as high as 34 gems. And the action is extreme. We can see some huge pumps here, and then we also see formations happening. Something that I'll be teaching you as we're doing this is a triangle formation where you have an ascending bottom. This is a parallel triangle. And then you usually break out of these to the upside. And sure enough, it did. And so as you're going on an overall uptrend, you'll see the continuation of these triangles where the price wedges down and then it pops. Price wedges down, then it pops, except for this time it broke to the downside. All right. But overall, it looks like this footprint is in an uptrend. Okay, so these are the type of things that we're going to be looking at when we break down the items. And when I see something that has just very clear indications, I'll share that with you. Or I will just share, say, one of the grails. Let's just look at the wall. We'll end on that. This is approaching 20 minutes here. Let's say Walt. Okay, partners. Let's call it partners. How about that? There's partners. So let's bring this one up. We'll end on this one. Collapse this down. Man, oh man, I'm telling you, this is just powerful, guys. I mean, it's ridiculous. The Bollinger Bands is also something that we can use to know when you're about to pop. Okay, let me just throw on the Bollinger Bands. Let me pull myself down here and show you how it helps us. Okay, let's save that. Now, the way this indicator works is the tighter the bands get, the more volatility, the chance of volatility happening. It's like when the band tightened here, it was very tight. We popped out and then it opens up and we had this little miniature run up. Now, look at the tightening that went on from here to here, very tight. And what happened? Bam. We run to the all-time high. And notice how the width of these bands just goes completely wide, all right? Going from either side here. See how wide this is? And then once volatility is over, here we go into the distribution period, you can see that the Bollinger Bands start to tighten up a little bit, okay? So now, as we're squeezing down, volatility is getting lower and lower, the fluctuations in price, and it got really tight here. And then we got that little breakout where it widened up just a little bit in this gap. Notice how tight the bands are now. This is telling me that when it breaks out, it's going to break out hard. Now, how long will that be? I don't know. It could be 6 months. It could be a year. However, after all of this action has happened here, and you're in this tight zone, it would be a good idea to buy a grail like this when you're in this tight Bollinger Band situation. Now, let me just end it saying that this is not financial advice. I should have started with that, but I'm just showing you the power of this. And my goal will be, especially for the people in the Crypto Pro group, my goal will be that you will learn the basics of technical analysis, because this is stuff that I learned in trading cryptos. And NFTs are cryptocurrencies. They are based on the blockchain. The underlying structure is cryptocurrency. And that's why we see the same price action, the same indicators, and the same chart formations when we look at these things, okay? So this is super exciting. And one more time, big round of applause for Omi the Clown. My man, this is great. I tell you what, I'm going to have so much fun and so much great content coming your way. Yay! To talk about these charts. So thanks for watching, and I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And if you want to support this channel by donating a super thanks, I would be forever grateful to help me defray the cost of producing these videos for you. That's all I've got. Post in the comments if you are excited to learn how to read these charts. I'll be back very soon. This is Carlton, and I am out.